What's your current take about the economy itself, but also where the stock markets are in terms of fairly valued or not?
Yeah, I think the economy is actually quite strong right now. The question is where it's going to be in 6 months and 12 months. But we're at full employment. There are plenty of jobs available. Wages are going up. Howard Hughes, company we own, is opening a kind of food hall, the John George Food Hall at the South Street Seaport. We've had to hire 600 people, and they've been working really hard to do it. We've only hired 350 people in the last couple of months. So if you're looking for a job, there's a good one there. So I think the economy itself is very strong. I had the opportunity to see Jamie Dimon this weekend. I apologize, I still am a little congested from COVID. And Jamie talked about, number one, this is the lowest default rate period in history for the consumer part of the bank, and that their full spectrum of people that they poor to rich that bank with J.P. Morgan and Chase and so on are in the best position they've ever been. So I think we've got well-capitalized consumers for the most part, although I do think lower-income people are getting a lot of pressure from higher gas prices, higher food prices, higher rental rates. And I think the biggest problem for the economy is inflation. And inflation is roaring. It's continued to rage. And unfortunately, the steps taken by the Federal Reserve have not been effective. Since June, the first 75 basis point increase, financial conditions have eased enormously. Stock market's up, depending on market, 10, 11% and more. You look at the 2-year Treasury, which is a kind of good indicator of kind of where Fed funds should be over the next 8 quarters, is under 2.9%. And with the Fed today at call it 2.5%, basically the market's saying that the Fed funds will average only 40 basis points above the current rate over the next 2 years, and that implies really no financial tightening at all. Just at the last meeting, Jerome Powell said, that the Fed was now comfortable that it reached a sort of neutral level of rates, which, again, a fairly extraordinary statement in a world with 9% inflation. So I think the problem is... And
so what would you be advocating the Fed do then?
I think the Fed has to be aggressive in raising rates, getting to something probably with high 3s, 4 handle, checking in to seeing how things are going. But I think rates are going to have to stay 4% plus for the foreseeable future, 12, 18 months or so, in order to kill this inflation. They may need to take rates higher. And I think that's the biggest risk to the markets, is that people are not pricing that in. And I think we need to, the Fed has to take its foot off the accelerator. And when you can borrow money based off a 2.25% to 2.5% SOFR rate, that's the kind of base rate for borrowers, and inflation is 9%, and it's going to be persistent, certainly in the mid-single digits for a long time. You borrow as much money as you can. And so the current prevailing level of rates is amping up the economy, which is why we are having the inflation that we are having now, coupled with the other global factors, of course.
Bill, do you like the CHIPS Act? Do you like the other reconciliation bill that Manchin is backing? Does a lot of, we think of the Fed, but a lot of times the Fed is just enabling whatever administration, whatever Congress is doing. They got to keep rates low. They're sort of like partners in crime, if you will, for at least, in my view, for some of the profligate spending that goes on. Do you like either one of those pieces of legislation?
Yeah, I think there's merit to what you say. I think what got us into this mess was an extra couple $2 trillion of stimulus that was intended. And unfortunately, when a new regime comes into power, they want to do something for the people that elected them, right? And here, it's very, very easy when you control the Congress and it's a new administration to spend money. And unfortunately, $2 trillion that was spent was the extra fuel that caused the extreme inflation. And the extreme inflation is actually affecting people who are, the Biden administration was trying to help, I think, through that stimulus package. So you've got to be very cautious about adding more fiscal stimulus at a time like this. The CHIPS Act, again, I haven't read these in detail, but I feel like the chips industry, they've got some very well capitalized, very well-run companies. Do they really need $50 billion? I'm sorry, whatever the number is. $50 billion.
More than that.